All right, welcome to our briefing. Today, we're diving deep into Batu Kawan Berhad's 2025 fiscal year. We're going to unpack the group's performance, but we're really going to focus on a major challenge they're facing in their manufacturing division, and more importantly, the game plan they've put in place to turn things around. So here's how we're going to break it all down for you. First, we'll get a quick lay of the land, who BKB is. Then we'll dig into what went wrong in their manufacturing arm. After that, we'll look at what went spectacularly right in their plantation business, lay out the big turnaround strategy, and finally give you our take on their path forward.
Okay, first things first. To understand the story here, you have to know that Batu Kawan Berhad, or BKB, isn't just a one-trick pony. It's a huge investment holding company, and its business is really built on four main pillars.
And this slide, well, it tells the whole story in one snapshot. Just look at the numbers. On one hand, you have the plantation division, an absolute cash machine, pulling in over 2.3 billion ringgit. And then, on the complete opposite end of the spectrum, you have manufacturing, which is the big challenge we're talking about today, posting a loss of almost 174 million. This massive divide is really the heart of the story for BKB this year.
So, let's zoom in on that challenge. The manufacturing division, we're talking oleochemicals and industrial chemicals here, ran headfirst into what you can only really call a perfect storm. It was hit by a whole bunch of pressures, both from the outside world and from within.
And the bottom line speaks for itself, a pre-tax loss of 173.6 million ringgit. I mean, this is a complete 180-degree turn from the profit they were reporting before. It's a huge red flag that pointed to some deep systemic issues that management absolutely had to address.
Now, what's so interesting here is that this loss wasn't just one thing going wrong. It was a whole bunch of things converging at once. You had this global overcapacity that was just crushing margins. Then the cost of raw materials shot up, squeezing them even more. And critically, demand from China, a huge market for them, was just flat. As if that wasn't enough, they got hit with a major production problem from a gas pipeline explosion, all while they were spending money on getting new facilities up and running, a true perfect storm.
Okay, so while all that chaos was happening in manufacturing, let's flip the coin and look at the other side of the business. Because the plantation division wasn't just doing okay, it was absolutely on fire. It was the financial rock that held the entire company steady.
The performance here was just incredible. A record pre-tax profit of 2.31 billion ringgit. That's a 40% jump from the year before. This amazing result, mostly thanks to high palm oil prices, basically generated the cash that allowed the group to absorb the hit from manufacturing and, more importantly, to fund a massive strategic pivot.
And these pictures really give you a sense of the sheer scale we're talking about. BKB is one of the biggest planters in the world. This huge, productive land bank isn't just an asset on a balance sheet. It's the engine room of the whole company. It's the foundation that gives them the strength to tackle big problems in their other businesses.
Which brings us to the core of this whole analysis, the strategic turnaround. BKB didn't just sit back and hope the market would get better. No, they put together a very clear, very deliberate blueprint to fix the manufacturing business from the ground up.
The whole plan really comes down to three key moves. First, get these brand new super integrated facilities online to be more efficient. Second, tighten the link between their plantations upstream and their manufacturing downstream. And third, and this is the big one, make a strategic shift away from selling basic bulk stuff and move into high-value specialized products.
And here's a perfect example of what that first step looks like in the real world. This PTPSS complex in Indonesia is a total game changer. Think about it. They've got a refinery, a crushing plant, and other facilities all in one place, with their own port. This is going to slash their logistics costs and let them capture way more value. It's a huge move to get costs under control.
Now, I want you to remember this word, decommoditation, because honestly, this is the single most important idea in their whole strategy. It's about getting out of the brutal, low-margin game of selling huge volumes of basic chemicals where prices swing like crazy. The goal is to build a business that competes on value, not just on volume.
So what does that actually look like in practice? This slide lays it out perfectly. They're moving from selling bulk oils to making specialty fats for the food industry. They're shifting from basic oleochemicals to high-end ingredients for pharmaceuticals and nutrition. The whole mindset is changing from a game of high volume to a game of high value.
Okay, so we've seen the problem and we've walked through the plan. What's the bottom line? What's our take on this path to recovery? Let's boil it all down to the key points and give you our perspective on what's next.
You know, this quote from our own report really nails it. The whole point of decommoditization is to build a more resilient business. It's about creating a manufacturing division that isn't constantly getting tossed around by the waves of the global commodity market, but one that can actually generate steady, higher-margin profits.
But here's the thing, and this is absolutely crucial. A great plan is useless without the cash to back it up. In BKB, they've got the cash. A war chest of almost 2.9 billion ringgit. That is a massive cushion that lets them fund these big new projects and ride out any market storms without having to abandon their long-term plan. You really can't overstate how important that financial strength is.
And so that leaves us with the one big question. The strategy seems solid. The balance sheet is definitely strong, but the global environment is still tough. So the key question for anyone watching BKB is this: can this pivot really work when they're still sailing against these strong global headwinds? That is the multi-billion-dollar question on the table right now.